Hi, Tom. How are you on
Um,
this Thursday? This is a very interesting session because we had that massive move on Monday
yes.
and no index has gone above that high. So we've got to watch this closely, and I'll show you some interesting things because it coincides exactly with what we're looking at in terms of patterns, waveforms, time sequences, and that's what I'll be talking about a week from today.
Okay.
It's all day a live intraday session webinar in two parts. We start off in the morning. We talk about the technical tools based on the Chapman Wave methodology. It's really a detailed all-day online course. And it also, I will take, not many, but I'll take some requests because people like to have stocks that they have in their portfolio. And
Sure.
I think it's very important that they get to understand it in a technical way that maybe they haven't looked at before. And some of the techniques are really very simple. And every single trading platform has, straight lines. They all have these parallel lines that you can draw. So the tools are there. They have the MACD, the stochastic, on balance volume. I think just about every single brokerage company has those tools on their platforms. So they should be easy to use. So from part one, we do 9 o'clock in the morning to 9:30. We start discussing just a quick review of the three or four patterns. And when I say three or four patterns, I really try to make it as simple as possible. I'll show you right here. Let me just get this particular chart. Disappeared. There it is. That I'm only looking at three different ways of the patterns in the market: straight line up, straight line down, and basically they get little wiggles, but it's a very quick move up and a very quick move down. And it doesn't matter whether you're looking at the 1 minute chart or even a monthly chart, the patterns always remain the same because they're really a reflection of, it's a price point of human nature in the market. That's the way I like to look at it. So that's one straight line, a cup formation, and an arch formation. And then you can get a mix of a straight line down, and then it curves over, usually I talk about these peaks, usually at the first or second peak, starts rolling over. We saw that all day. I'll show that to you in a minute. And you take out the left side low, and you can keep going down. And on the right is very positive. You take out that left side high and make a cup, take it out. That's very positive. You can see basically three patterns we're looking at. And I'll be discussing those patterns. And then I will pick out what I did today in my show at noon. Anyone who's interested can look at the archive. I took a blank chart, a 1 minute chart of the E-mini. Oh, I should have probably used something. Maybe I'll do that tomorrow in my Tiger Technicians Hour at noon. I'll choose something that most people have. Not everybody has the E-mini chart. I should have thought of that. I'll just go to something they can type in. Everybody's got a stock or something like that, and we'll do it live. And then so we'll be looking at these patterns and saying, what charts are forming these patterns? When the market opens at 9:30, what are we looking for? Why would we want to go long? Why would we want to go short? What are the things we are looking for in terms of patterns that have already been met and give an optimal entry point? And then we'll start adding the different tools one at a time. And I'll show you something that we did this morning. So this is the chart with my technical tools. This is the 1 minute chart. Where was I? 12 o'clock. There we go. So I was doing this live, and then I said, we made a peak D top at about 12:10. We started coming down. And I said to myself, let's just do this on a blank chart. So I took a blank chart, and all I put in was the 9-period moving average. This is the green and pink line.
Okay.
But everything else is just candlesticks. And I showed that in the methodology that I use, you don't have to have all those other accoutrements. Here's the H pattern. Remember, I'm looking at the H, like this is the leg that comes down, bounces up, and turns down. What were we looking for all the time? Peak D. So here's your first peak D at 11:05. Here's another D, the fourth peak in the Chapman Wave methodology. That's where you start to look for a potential breakdown. Look how successful these were. And then we come down, make the cup, the arch formation, the dreaded H. It can't hold the left side low, so it means you're going to go lower. And then all of a sudden you get a bounce. And then I showed how you can draw a cup formation. You don't have to have it as a cup. You can just know that it's going to go from right here to the low. And you've got the left side, right side price time match. And look, you missed it just by a few 1 minute bars. It went to this leg right here and then turned down. So these are basically very simple techniques, and then slowly we'll add all the other things where we can talk about, okay, so this is the 1 minute. Let's imagine this was the daily. What would this be like if it was the weekly? For instance, we have for subscribers to my opening call, we've been long the Dow. This is making, I'm pretty sure there's going to be a peak D top we're looking at here. And I'll show you something very interesting. You and I spoke about this just the other day when we were talking. I said Agilent, which we've been long since about 70, ran up to 117.50. And what was that leg? Peak D. And what did I say? I thought there'd be a pullback. And we've got to watch, because there's a particular technique with that arch formation and the spike to the upside, to see if it's going to come down deeper, because we've already taken nice profits in this, very good gains, and we have a core position left. Do we want to add, or do we want to exit? And that's going to be the thing, because here it is in leg D in the weekly chart. So we went from the daily, held it through the weekly, and even the monthlies had a really good gain. So that would be like looking for those short-term traders, intraday traders. Could be a 1-minute chart, a 5-minute chart, and a 10, or you can scale it like that. And if the 1-minute chart is acting very well and it leads to the longer term, let's call it a 3 or 5-minute chart, you can now take over your position. Maybe you were long. You can hold that long position even longer, because now you're looking at a longer time frame. So it's really interesting. Then we'll stop at about noon, and then some people have questions that they want to ask, so we'll use 12 to 1 o'clock. We'll have a bite to eat, and then we'll come back, and then we'll just try to fill in for people that might have missed something and want a little review. And then we start the real thing at part 2 starts at about maybe 1 o'clock. And we go through, and I ask people all the time, what did you want to get out of this course?
Yes.
What are you not getting? What can I cover to recap, to make sure that, you know, we're talking about straight lines, channel moves. They are very simple techniques. Is there something you don't understand that we can go over again? And you'll be surprised, because it's always one person asks, but it's really a question that's on the mind of other people.
No doubt.
So,
and folks, it's really cool how Basil has it set up, as he was explaining. So, you know, you're going to get the pre-market, 9 to 9:30. You're going to get the whole setup of the Chapman Wave, you know, from basically 9:30 to noon. You have the break. You get your questions. Then you come back in the afternoon. And on top of that, folks, as soon as you sign up, and the whole course is only $295, and